So Monday, something about 6 o'clock Eastern time. I thought a few comments would be helpful about financial markets. I don't do posts on financial markets generally, and there's a reason for that. And candidly speaking, the fact is that the background and experience I have in financial markets is too far beyond the retail market world. People who know me know that I've spent, time and residence on 3 different continents, dealing in the largest financial institutions in the bond derivatives market. And, the language, the size, the concepts just are not available, because on CNBC, Bloomberg.com, Reuters.com, you're not going to find the information there. It's not available. And, it's largely because it's not really relevant, because just the size and scope of the investments involved are beyond 0.01% of the investors. So it's just not, not conducive to receiving clicks and attention, subscribers, if you will. So let me step back here about the backdrop. As most people, if you look on or hear in the media, you will see that there are headlines about China and the fact that it's devalued its currency. And basically, I wrote in some private emails today, make no mistake, stocks, Netflix, Tesla, Google, Amazon, those are for show and those are for headlines. Global portfolio managers, where the big amounts travel, they don't care about the price of Facebook. Not at all. They only care a little bit. They don't care at all. Not whatsoever. It doesn't affect their portfolio construction. They're not looking at individual line items that you're watching a 15-minute clip on CNBC.com, or that you're reading some article in, what used to be Business Week, right, about what great growth prospects, et cetera, whatever challenges, Instagram and Facebook, face. Not relevant. Totally irrelevant. I can't express that enough, because in professional financial markets, equities, stocks, are the amateur market. It's made for everyday people, because those are the names that people recognize. The professional market is the bond market. And what you basically have is that, most of the big signals come from the bond market. That is the case. That one way or the other, that the bond market is driving where things go. And I tell persons, if you want to focus on one specific number anywhere in the world, I would simply tell you, just know where the U.S. Treasury, the U.S. government bond, the 10-year note is. Just the 10-year note. From there, you can get all sorts of implications that tell you if things look right in the world as a whole. And of course, I'm oversimplifying it. But if there was a number, it is not from Amazon stock. It is from the U.S. Treasury note, the 10-year. So now we've had this signal for some period that something isn't quite right, which is that the interest rate on 10-year notes has declined precipitously, et cetera, and then you get all the other news stories. The Fed has moved. The president doesn't like the Fed, not aggressive enough, et cetera, and then you've got these lengthy debates on TV. Okay. And there's certain elements to truth in all of that, and there's not questioning the people talking about the bond market on TV. Those persons are, at the top of their class, if you will, running the biggest mutual funds in the world, for example, that exist in the bond market. That's a professional, no question. I mean, everyone on these shows is professional, but I'm just talking about the size and scale of these markets. in a whole nother stratosphere is foreign exchange, right? You cannot conduct any financial transaction without elements of foreign exchange. You're buying some imported part. You're exporting and importing. Okay? So the fact that China has used foreign exchange as their weapon of choice, it can only remind me of this scene up here.
You said you wanted to know how to get to Capone. Do you really want to get him? You see what I'm saying? What are you prepared to do?
Everything within the law.
And then what are you prepared to do? If you open the ball on these people, Mr. Nash, you must be prepared to go all the way. Because they won't give up the fight until one of you is dead.
I want to get Capone. I don't know how to get him.
Want to get Capone? Here's how you get him. He pulls a knife. You pull a gun. He sends one of yours to the hospital. You send one of his to the morgue. That's the shutdown.
And there it is right there. Right? Which is that, the fact of the matter is China has ratcheted up this fight another multiple number of degrees. There's no other shortcut. There's no other explanation. There's no other rational way to understand any of the headlines. Okay? And this is something we've not seen. We've not seen this situation in years. I can't remember when a lot, and especially in this particular combination. Okay? And in the newsletter, the Maximize Your Medicare newsletter, I swerved out of my way the last time that this reared its head, sometime in the June timeframe, right? May, June timeframe, which is I went through explaining how different even the communication, the state of mind is against China, a competitor, right? This is not 30 years ago. This is not 40 years ago. We don't have in the United States the same clout we have on the global financial stage. This is a fact. Simple numbers tell you the case. China is 1.7 billion people. 1.7 billion. That makes them, 5 times the size of the United States population. The other things that I was saying in this article in the newsletter, and I didn't bring it up here today, right? United States, our long run, you know the way that our attention span is in the U.S. This is a week? 2 weeks? China's long-term planning is multi-generational. Multi-generational. Okay? Their idea of long-term planning is 10, 15, 50 years. That's not their mentality. That's not their mentality. Third is just the way that they communicate compared to us. And you wouldn't necessarily know this. Here's a news flash. I am from Asian descent. And there are always elements of some background. And, one of those, of course, dominated by Confucianism in Asia. Well, us in America, we don't necessarily communicate in the same way. And here's your easiest example, which is that in Confucianism, talking in riddles, talking in circles is evidence of cleverness, intelligence. Talking in circles in the Western Hemisphere is evidence of lying and deception. So right from the jump, we're on a different page. We're on a different page. So now you're going to negotiate with these people, whoever the party is. And you have such a different context, starting points, that maybe even the method of talking doesn't work, right? And then you have prisoner's dilemma. Then you have game theory on top of that. So, okay, I know that you know this about me, so I'm going to use it against you. And around and around and around we go. And I found stunning during the June timeframe that the sitting president would say, we're going to out-negotiate them. We're going to outmaneuver them. They're going to come to the table on our terms. Really? Really, that seemed like evidence of underestimating your counterpart, and which I find triply ironic, because you could easily state, and I've been outwardly saying this, which is, underestimating your opponent is precisely the path that this president used in order to attain the existing position. Mrs. Clinton, you underestimated your opponent, and now the sitting president seems to have underestimated and misinterpreted his. Last, don't think that China doesn't understand this. Don't think that China doesn't understand its position. And I've told people, clients in face-to-face meetings, if I had to name a single vacation destination to someone, go to Beijing. Forbidden City, the government buildings, you will see it. They are every bit the size and scale of Washington, D.C. They're not playing second fiddle to anyone. They don't see themselves in that way. Even the Chinese translation of the characters to write China, if you write it down in Chinese characters, the strict translation, right? So it's kind of like Greek. Yeah, it's like Greek, right? Where you have like word pieces. If you break the word China into the meanings from Chinese language, what you get is central nation. By central, meaning another way of saying it is important, vital nation. You add those four up. Does this look like China's going to back down easily? Not me. When they use this path, which is by far the dominant finance market in the world, foreign exchange, by far. I told you that stocks were at the bottom, bonds were the professional market, foreign exchange is yet another tier higher, and by a huge amount. So in financial markets, you get a bunch of noise, right? Tidbits, stock tips, pick this, buy your marijuana stocks, etc., etc. And that can be largely attained to noise, but as for portfolios as a whole, and this is on a global basis, it goes in the order that I mentioned. And the snarky way that I put it is that stocks are the flea, bonds are the tail, foreign exchange is the dog. And let's not make mistakes. So as a result, this particular piece of information is the dog. In other words, it can dominate everything, all of it, and take everything else with it. It is powerful enough by itself. Okay? So I don't want to underestimate, mischaracterize the importance of what is actually going on. And unfortunately, I've read through some of the big websites. CNBC.com. Well, when the market drops by this much, 73% of the time the market goes back up by about 2.3%. Yeah, but they didn't go and say two things. Two omissions. Number one, they didn't tell you what happened in the other 27%. Right? That's kind of a big omission. Right? Because if 73% of the time you went up by 2.3%, and on the other 27% of the time one of those was down by 25%, you have an entirely different scale. Okay? Not mentioned in the article. The second one, and they kind of let this out at the very last sentence of this article, saying, unless this time is different. Well, guess what? I've just spent the last 10 minutes telling you how different it is. Okay. So that's not really why you're here, but I wanted to set the backdrop accurately, right? Because that then does have its feedback loop back to portfolios from a practical point of view. I'm going to move myself out of the way. And what I'm going to do here is I'm going to show you portfolios, real portfolios. Names aren't there. Forget it. I'm not going to reveal names. However, what is important here is the relative size of pie, the pie shapes. Let's go here. So you can see it here. This literally is someone's portfolio. Literally. You can note that how simple it is. 3 items: equity, bonds, cash. Cash is an asset class. Your broker tells you, okay, well, I don't get paid. They don't get paid fees on cash. I don't agree with that approach. And here's part of the reason why, right here. Right? When there's certain situations where cash is the one that outperforms everything. This person basically came to me and said, Jay, I detest losses, period. I detest losses, period. Number 1. Number 2, I have income that I don't use the entirety, and it's guaranteed for life. Okay. So now you can see why I don't like the boilerplate way approach to financial advice, financial planning, financial advisory, whatever you call it, right? You first must set up the context of the person. So those 2 pieces of information are very, very important. Number 1, detest losses. What does that mean? As much into as safe as reasonably can. Now, I didn't say completely 100% safe. This was the only one that's 100% safe. Cash. So if as long as the US dollar is a currency, this is completely safe. Absent inflation. Okay, fine. Bonds. Safer. I didn't say completely safe. It still has price risk here. Okay? So unless you hold a bond to maturity, there is price risk here. Nevertheless, you can see this is the riskiest asset class, equity, and you can see its part in this pie. Small-ish. This is on the low end. And so what I'm doing here is I'm setting up benchmarks here, just as goalposts. I'm not going to run through every portfolio, right? This person is in this situation. Detest losses, as I said. And the second one, lifetime income already in hand. Already knows it. Okay? So you can see here, in other words, the returns to the portfolio, the overall pie, is not generating income by which the bills need to be paid. That means this person can afford to have more risk-free or less risky securities, cash. You add these 2 up, you get to 74%. 25%. Just enough to see some growth if it happens to occur. Not so much to hang on themselves out just in case they need the money for emergencies, which they don't necessarily have. But when you couple that with the person's opinion and the way that they'll look at their statements, the way they'll feel after their statements, even after we talk. Now, we'll have all different twists. The portfolio for someone, even when these numbers are the same, right? You can see I did not attach the dollar amounts here. And there's a reason. Because the dollar amounts didn't really matter, right? In other words, that same person comes to me and doubles these numbers. This portfolio, these relative pie shapes to each other, these percentages, is what's driving the boat. And you can see how simple and clear it is. There's a reason for that, and that will come up in the next slide, which is if we need to adjusting costs us $15, $20, we can easily move cash to either one of these 2. We can easily increase or decrease this. We can easily increase or decrease this. When is this important? It's not important when the water is calm and everything, and there's a bunch of small little incremental changes as a result of white noise. Okay? It matters, however, when the world becomes volatile. We must be able to adjust. Must be able to adjust. When we've determined that this is not just random event. This is not just random event. I spent the first 10 minutes with Sean Connery and Kevin Costner. Man, they look young, right? Kevin Costner, look how young he looked. Is that this is a signal. So as a result, we need to look through these pie shapes. And that's what basically the entire business day was today. Looking through these pie shapes relative to each other to determine, hey, do I need to change these relative pie shapes here? This person, no. Not a bit. Let's take a look at another portfolio here, and this is going to be very, very different. So, again, you can see a portfolio, and this is a portfolio that we don't manage on a day-to-day basis. It is simply us consulting with this person, and the numbers here are big. Okay, the numbers here are big. Now you see the issue, right? Which is a couple of observations. You remember from the previous portfolio, and let's just see if we can I'll put them up next to each other in a little bit, but let's just go back here. This portfolio, how simple and clean it is. Done so by design by us. Done so by design. Just so that we'll quickly know what is going on, and quickly know how and if we need to adjust. This portfolio, it's not possible. I can't pick up the phone. I can't pick up the phone or go onto my computer and slice through every single pie slice here. Just can't, it's not practical. Now, I had different, and I've voiced these opinions, right? I've had different opinions about financial markets. I don't like this number here at all. I'll be very clear here. You can say the United States is a bunch of negative stuff. That said, I would take an average basket of American companies over any other country on the planet, and it's not close. And especially when it gets noisy. This is for nice, cute trim to say, hey, look I'm charging you a bunch of fees so I can get this beautiful, diverse, multicolored pie. That doesn't matter under duress, right? Because these are all linked to each other. Over here, 1, 2, 3, 4. Your individual equities, I promise you, except in the very, very isolated situations, are going to be minus today. Almost for sure. Right? In other words, and I use this analogy, you could have the most beautiful tree in the forest, the healthiest tree, widest trunk in the forest. If the forest is poisoned, your tree is going to be damaged. Period. Right? That's just the way that portfolios work because of the fact that we are comparing ourselves to the S&P 500 or the NASDAQ or to the Russell 2000, that kind of stuff. When an individual equity is part of those indices. Okay. The second thing here is I want to add these numbers up. So 40 and 15, 55, 65. You can see it here, equity, and you'll see I'll move my head. Let's see if I can move this for just a brief moment. So you see emerging markets equity, that's EM equity, is 0.6%. So you can see here what's going on, which is that a number of different things, right? And we will go through that now. And this I did not actually even plan on doing when I first hit record, but we'll take a look at it anyway. All right, so what I'm going to do is I'm going to scale this one down. And I'm going to take this one and I'm going to scale it, make it so that we can see them side by side with each other. And I know this is just, the important point here being, the size of the relative pieces of the pie, so that you can see it for illustration purposes, right? Oops, sorry about that. So you can see here that this is a far more conservative portfolio, rightfully or wrongfully. Rightfully or wrongfully, right? As I said, situation here is different of the individual person. Right? This person does not rely on any money from here. None of it. Okay? And it's a big number. That said, do I really want to bump up and down by 4%, 3% on a particular day? Is because this piece of pie, bond plus cash, 33%, 34%. This person is 65-35. 65 equity, 35 the other. For me, this has been the widest tilt, or pretty, kind of on the more extreme side of the equities versus bond. Since the person doesn't require the money to live, there's no scenario where any numbers get dented here, almost irrespective of how big the bill would be, literally. And that's not I'm not exaggerating. I mean, yeah, Martians could singularly, destroy the second home. Okay, maybe, right? So I don't want to, but in a weird way, that's even to make it even more, that I could make the argument in any way, which is I should even run a simpler portfolio. Don't need this money for any particular way, so unless I like watching numbers move for sport, which is fine, right? The person could just say, look, I like looking at my statements and my account balances every day because I like the intellectual challenge. Okay, it's your money. That, in other words, I fit the opinion of the person here and the portfolio. This person doesn't fit that, and yet this is the portfolio that I observe. If they don't match, the narrative doesn't match, the financial needs don't match, the risk isn't what I would have said based off the first 10 minutes. This is a problem. So I've already voiced this, and most of the time when I say, yeah, I don't really love this, etc., I have to tiptoe, and that's fine. That's fine. Because other advisors say, well, what does that guy know? And that guy meaning me. And that's why I went through the first 30 to 50. I don't even bother to reply. I don't bother to reply about, trading multiple hundreds of millions of dollars of bonds in a single phone call. That doesn't really, there's no point to that. There is no point to that. But if you think through the logic for everyday people, irrespective of the size of the absolute dollar of these portfolio, right? It is kind of why these portfolios must reflect kind of, number one, your financial needs, and number two, your outlook, your opinion, your emotional state of mind when numbers start swinging around in bigger numbers. Yeah, I understand that when it's gradually up under calm waters, it's easy to just set it aside. But actually, if anything, it would have told us that we needed to be more vigilant at that time to look through these details. And the reason is that for the last months, this number over here, bonds, where the professional market existed, had signaled to us that there is something weird. Right? The professional market tells you. The equity market follows these in this particular size. And when you throw in the foreign exchange market, you have a signal that we absolutely must pay attention to. Be sure to sign up to, you can see, can you see lots of stuff? Yeah. So I'll mention this here at the end. Hopefully you've gotten something from this today. In here as a one-time service, I will look through your portfolio and give you my evaluation. It's one time. It's one time, one price, no matter how much time it takes. Okay? And it's valuable, and it's not usually not, people don't call me like they did today, right? They go, oh yeah, well, I thought I read something by Jay that he was mentioning some weird stuff over here, and now it's occurred, and now I've remembered, so I've sent him an email. Okay? Because like I said, when it's calm or just like noisy, just small blips here and there and gradually up, everybody goes, oh, well, you know, what ends up happening is, just like in football, right, on Monday morning, everyone gives false credit and false blame. And so what ends up happening is the numbers are higher, my advisor is the one to get the credit. That's for a different day. I'm Jay. You can send me emails, go look on GH2 Benefits and see the service. And if you need to ask me questions or send me an email, you can go to the service. There's a contact form down there. Talk with you next time. Be sure to subscribe to the YouTube channel. Very important here. I'm not going to be talking about financial stuff outside of Medicare that much. It's going to be very selective, very specific cases. There will be one on long-term care, as well as a bunch of new products called, you know, with living insurance with living benefits, annuities with living benefits, that type of thing, things to help defray the cost of long-term care. That will be coming up over the next couple of weeks, and then you can pay attention to that. But be sure to subscribe to the channel. I'm making comments about the news and the election cycle. We're here now. It just so happened that, you know, I'm being pulled into this debate. I don't think there's any way getting away from it. Medicare for all, public option, the Democrats versus Republicans, the Democrats versus Democrats. All of that is front and center. We're not going to be able to, nothing's going to change over the next year, I don't think, if not further than that. So pay attention to the videos. I'll try to clear out the crazy amount of noise. It's incredible. My head is spinning even before today. All right. Talk with you next time.